In this engaging and informative video about choosing and assessing stocks, particularly focusing on the Magnificent Seven, you can follow this structure. Step 1. Introduction. Briefly introduce the concept of the Magnificent Seven stocks. Explain the importance of choosing the right stocks and assessing their performance for making knowledgeable investment decisions. Step 2. The Magnificent Seven. List the Magnificent Seven stocks: Apple, AAPL, Microsoft, MSFT, Amazon, AMZN, Alphabet, GOGO, Facebook, Meta, MATA, Tesla, TSLA, and NVIDIA, NVDA. Mention their significance in the stock market and why they are considered top choices for investors. Step 3. Criteria for choosing a stock. Financial health. Look at revenue, profit margins, and cash flow. Growth potential. Consider future growth prospects and industry trends. Valuation. Assess P/E ratio, P/B ratio, and other valuation metrics. Management. Evaluate the company's leadership and their strategic vision. Market position. Consider the company's competitive advantage and market share. Step 4. Assessing performance, key metrics. Earnings per share (EPS) indicates profitability. Price to earnings ratio (P/E) helps assess if a stock is overvalued or undervalued. Return on equity (ROE) measures financial performance. Debt to equity ratio (D/E) indicates financial leverage. Free cash flow (FCF) shows the cash generated after expenses.